So we think 74 cents is a reasonable place for Aussie to stop. We had been looking for that target to be reached by the end of this year, but now it looks like it could be reached 6 months sooner, maybe by the end of June at this rate. So the dollar rates move has concluded at this stage, but we now have other factors to consider as far as Aussie in particular is concerned, and that is the performance of risk assets over the next few weeks. Now, there's a good chance, I think, that equity markets and commodity prices will start to fall further, and that will drag Aussie down towards that 74 cents area. Why do I say commodities in particular should get hit? Well, think about why people were buying commodities for the last year. Many, many reasons, but one of them was as a hedge against faster global inflation, and US inflation in particular. Having seen what happened to the dots last week, the risk now of the Fed allowing an inflationary surge for an extended period of time, that risk has essentially gone away. We know that they'll be nimble, as you said, that they'll be reactive, and they'll do something about it if inflation gets uncomfortably high. Therefore, the need for an inflation hedge goes away, and that should allow some money to come out of commodity markets, taking Aussie down with it.
Back to my earlier point, though, about the RBA remaining sort of stubbornly dovish. Another stubbornly dovish central bank is the ECB. When we hear from Christine Lagarde again, do you think she will remain to be talking that dovish tone this week, and could it also sink the euro?
Yeah, I think she'll very much stick to that script, the one that she rehearsed, if you like, at the press conference following the latest ECB policy decision. No reason to deviate yet. The US is very much well ahead of the Eurozone as far as the position in the recovery is concerned. On the RBA, though, I'm glad you brought it up, because while the RBA has been very dovish up until now, things could change slightly on July the 6th. That's the next RBA policy decision, and we do expect them to start inching towards policy normalization. Obviously, the RBA has rejected the idea of stopping QE completely, but we'll probably see them shift to a far more flexible regime, and that will be a clear sign, I think, that they're not quite tapering, but preparing for the day that they will be able to taper in sync with the Fed's own taper. There's one other thing to watch out for at that meeting, and that is currently the RBA's guidance suggests that there will be no hike until 2024 at the earliest. Now, there is a chance that that date guidance will change. It might even be dropped, and they might even give themselves what we call an escape hatch to allow the 3-year yield target to be dissolved or removed before the underlying bond actually rolls all the way down to maturity. Now, if that happens, that should give Aussie a bit of support, but it will be fleeting, I think, in a competition between Fed hawkishness and RBA hawkishness. The Fed is bound to win, and the US dollar should win that battle, again, allowing Aussie to settle around 74 cents.
Absolutely.